All right, so what we're going to be talking about here is some information, hopefully, that can be given to you that will enable something for you to do. Okay, and something for me to do. This is what I do. You may do something else, okay? Oh, we got markers. Doug, try to erase markers. Bullet point, okay? All right. Well, let's take a look at this now. When the Communist Manifesto came in, it was the exact opposite of the Constitution because it abolished private property. And it, of course, did this through taxes and inflation. Okay, and we drew the chart showing the taxes and inflation when we started exactly what's happening. So it's kind of irrefutable that this is happening. Okay, now, what do we do to protect ourselves against this? Okay, the taxes and the inflation basically hit anybody who owned private property. Okay? So anybody who owns private property, oh, this is great. Anybody who owns private, let's start over. Okay, so anybody who owns private property, okay, will have a problem. All right, now here's how the boys in the bank, when they introduced the income tax in 1913, by 1908, from 1905 to 1908, they solved all of their problems. Because by the time their program was implemented in 1913, they didn't, listen, write this down, they didn't have any income and they didn't have any assets. How can you do that? Well, I was careful. I remember my daughter when she was in school, and she came home in the second grade. She was all excited. She said she learned some magic. And I said, really? And she said, yeah, she's, what, 34 now, I guess, and she's got her master's degree. She works as a pretty important job. But when she was in the second grade, she came home and she learned this magic thing. She goes, look at this. She goes, da 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 da. I thought, that's really good, see? And so she says, not only that, but watch this, and she had a whole bunch of them. She goes, da 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 da. Okay, now, okay, we have just described central banking. That's all you need to know about central banking. Okay, how do you make ownership so it's not ownership? It's magic. Watch. It's called trust. What does a trust do? A trust makes it so you don't own the property. Now let me ask you, would you rather own your car or drive your car? Which would you rather do? Because drive means you're in control. See, somebody once said the definition of a pedestrian is someone who has a teenage child. Well, all right, so notice what happens. See, owning the car doesn't do you any good if the car is never home. So ownership really isn't where it's at. It's you want to control the car, right? So watch the dichotomy. There is a dichotomy between ownership and control. Control you want. Ownership, nah, it's just a problem. Liabilities and a lot of work, see? So the ownership of your property now is called, whatever property you have goes into what the Latin term here is for corpus, means body. So you have a body, and you grant or create, you are the creator or the grantor here, and you grant this corpus into a trust. Now, that means that you're going to have two trustees of a minimum of two trustees. So you're going to have trustee 1, you got to have trustee 2, okay, and you've got to have some type of a beneficiary. Now, we won't get into all what can be who or anything here because that's another story, another hour, okay? Now, what you've done here is that you have just divested yourself of ownership. You don't own anything anymore. You say, well, that's fine, but I didn't work for my stuff just so I could give it away, right? Okay? So what we want to do now is have the creator come over here. Remember we talked about Oliver Cromwell? He said, we don't want a king in England, we want a protector. Well, under English law, you have what's called a protector. The protector now of a trust, all he does is hire and fire trustees. That's all he does. Now, the protector also has you as the manager, possibly here, and you in turn have other agents and so forth, and all you do is you write the checks and decide where the money's spent, okay? That's all. Okay, notice what we have over here is control. Isn't that interesting? Over here we have ownership, okay? So what you do by setting up a trust is you divest yourself of the ownership, but you retain control. Are we having fun? You now drive the thing, you just don't have to pay the bills. It's like being a kid all over again, remember? Okay. All right. What you do is you divest yourself of the control. Now, the income tax doesn't apply to control. Nobody has to pay an inheritance tax when he controls something. It's only when he owns something. Now, who owns the trust? And the answer is nobody. It's in trust. Now listen, this takes da-da-da-da-da-da-da-da-da-da-da. Ready? This takes some real deep understanding. When this thing is in trust, nobody owns it. Because it's being held for somebody. Now, when the trust buys a piece of property for $100,000 and it sells it for $100,000, it doesn't have any capital gains tax because it didn't own the property. Are we having fun? Get it? No tax. No tax. Look, Mom, no tax, okay? This is hot. This is hot. There is no tax because there is no ownership. This is what the boys did in 1908 before they took in their manifesto as to replace the Constitution in 1913. This is the antidote. If you're ever out in the woods, you get poison oak or something, there's always an oak tree. If you take off the bark of the oak tree and there's sap on the inside, that's the antidote to the stuff that burns your skin. And it will neutralize the burn that the leaf gives you. Is this fun? See, because the leaf really isn't oak. The leaf is a little plant. What the oak is next to it, that's what cures it. Are we having fun? See, there's always in nature an antidote for every problem. Okay, the antidote to taxes is trust. Okay? Now, they did something else, too. Okay? That's the first thing. We won't go into it anymore here, except that towards the end I'll explain what our program is and how it works. And I think Guy's got another program that runs along, and, hey, you know, free country, free world here, okay? But, and you can do kind of whatever you want to on that score, but, or you can see somebody else. You know, you don't have to deal with us. All we want to do is give you the information to put you in control. That's all. Okay. This is not too good. Should come off. Okay, there we go. I like the color, though. That's a neat color. Okay. Now, the other thing he did was he said, okay, if you have a job, okay, what they did here, they said if you've got a job, for example, okay, you have what's called a gross income, and that's where the term comes from because it's usually pretty gross. And then you have your tax withheld, and then you have your net. So if you make $50,000 in a job, or your family makes $50,000, you'll have about $32,000 of it missing because that's your money withheld. Oh, excuse me, 18,000 with missing, excuse me. You have about 18,000 of this missing, okay, which represents about 40%, your paycheck missing, and you end up with 32,000. This is, I've just described to you the average guy in LA in the year 1991. Okay? Now, that's what income tax does, and Social Security does to this guy. Okay? He's pretty soon going to be up in the 60% missing and the 70%, and I think Sweden's already in 80%, or, you know, hear all these stories. This guy's locked in. He doesn't know that he's in control. If he doesn't know he's in control, then he's not. Okay, what they did was they set up another thing over here called business. This is important because this is what got business to back the income tax in 1913 after it wouldn't back it for 66 years. Why would business back it? Why would business be in favor of income tax? Doesn't make any sense. Aha, and thus we know more. Okay, what they did was they said, okay, you've got a gross income here, and now you deduct your expenses, and then you end up with your net, and then you pay your tax. Okay? And the flow goes something like that. Okay, notice there is one big difference between a business and a job, isn't there? And that is an extra box. One has 4 boxes and one has 3 boxes. This is a test. Okay, now, if the businessman, what's the value of the box? Well, if the businessman makes $50,000, on paper he will spend $50,000, won't he? It is not hard. You don't have to lose the money. You just trade it from cash to some property or some type of an asset, and the transfer of property from one form to another is a deduction, isn't it? You don't have to lose it. Just transfer it. Donald Trump, kind of idea, he's got this divorce coming, so he's transferring out. The poor guy's broke. You see, all of a sudden? Okay? See, he didn't lose his property. He's transferring it, isn't he? He's not stupid. He's just having a divorce. Okay, now. Okay, now his net, so the net here is 0, and the tax is 0, isn't it? Now, which group would you rather be in? Take your time. Okay, See, notice what we're learning here, okay? This guy not only can keep all his money, he gets to spend it and he pays no tax. This guy only gets 60% of it and he's taxed on 100% of it. Look at it, he's taxed on money he doesn't even get. But he thinks this is a great deal because he's been to school and he's adjusted. What does that mean? That means that his employer takes out $20,000, you see, and when he files his tax, he's only got $18,000 to pay, and Joe Lunchbucket gets a $2,000 refund. Is he happy? Oh, ecstatic. That is a week in Hawaii with his wife. And he's happy. He can hardly wait till next year. So if you go to the mall with your little clipboard and you ask people if they've got tax problems, you're going to find out they're going to say, oh, no, last year we got some back. That is adjustment. That's totally adjusted, okay? Now, what it takes to illustrate this is a story I think I read in the paper one time about a fellow back in Tennessee who had gone hunting. He had been hunting and he'd got lost. It was in the fall, the year was beginning to snow, and he couldn't find his way home. He couldn't find anything to eat. He couldn't find water. He was in terrible shape. So at the end of the fourth day, as this account went in the newspaper, he cut off his dog's tail and he made soup. And while he was eating the soup, the dog came over and looked rather mournful. So he gave the dog some of the soup. And he said that out of gratitude, the dog licked his hand. And I thought, that's it. That's the closest thing I can think of to actually having a tax refund. Okay, so what we did is we thought, well, we'd have a... So we thought we'd put a seminar together to show people how to retain their entire anatomy every payday. Okay, now, and so you see, if a guy is happy with this system, it means one thing: he doesn't understand it. Either that or he's got a degree. Okay. Now, so what we found here was that that the average guy gets up and leaves his house here. He leaves his home at point A in the morning, okay, and he drives to point B, which is his work. And then at 4:30 he comes back again. Ever notice this? Murphy has some new laws out. He says if you're a commuter, for example, he said the lane you're in will be the slowest lane. And his corollary to that is unless you should change lanes. Okay, now, so what happens here is that this guy does this every day now, 40 hours a week, and after 40 hours every week, he's broke. So what does he do? What's his response? Next week he does the same thing. I mean, like, this guy really doesn't catch on that this is not the solution to his problem. Okay, 40 years later, this guy's still doing this, okay? So we call it the 40-40 plan because he's broke after 40 hours every week, and after 40 years, he gets to be broke permanently. It's never dawned on him, this isn't the solution to his problem. Because he's adjusted, you see? Now, and there are some fringe benefits, like 2 weeks out of every year, this guy can go about 150 miles from home because that's where his nearest relative is, and that's all the money he has, okay? And then he comes back and he repeats this process for another 50 weeks. Is this guy happy? Mm-hmm. Very happy, see? So we thought, well, how could we explain it? So we got, some people call this the rat race, So we thought, well, we'll get some hamsters, put them in there, see what happens. So we did some surveys, and we found it's an interesting thing, that if we put a hamster in a cage, he does exactly the same thing. He runs around in his little wheel. So the only difference we discovered, by the way, was we found if we ever let this little guy out for 2 weeks, he never came back. And so we thought, what? Yeah. What we were able to learn from our experiments is that apparently one of the species is more intelligent. And we thought, well, now what really, what is the difference? What is the difference between this guy and this guy? And it came up, this guy's been to school. He's adjusted. This guy's not adjusted. You see the problem? See, so so we have to triumph over our adjustment here, okay? Now, so what we're talking about is that this guy never really realizes this is available over here, okay? So if we look at it more closely now, see if we can get this erased. Not easy. Working on it. Okay, is that about 95% of the people in the country, this guy was talking about, are over here, and only 5% are over here. Isn't that interesting? See, because only 5% of the people know about this. You see, I have a lot of fun with trust. See, because every time you present a trust somebody, this guy's going to go, well, if you can do this, how come everybody doesn't do it? And I'll say, that's a very good, being a salesman, that's an excellent question, sir. That's an excellent question, sir. Tell me, why didn't you do this last week? And he says, I didn't know about it. He says, you just answered your own question. You just answered your own question. Nobody knows about it, okay?